Hello and welcome to the Morningstar series, Why Should I Invest With You? I'm Emma Wall and I'm joined today by Naylor-Leyland, manager of the Old Mutual Gold and Silver Fund. Hello Ned.
Hello.
So gold, big part of your portfolio, it's in the fund's name. It's the question all investors want to ask you, what is your prediction for the gold price?
Well, I'm usually a bit loath to give a specific prediction, but I think that we're back in a bull market. And if you look at the last 20 years as a guide, then when gold is going up, it usually goes up low double digits per year. So I don't know, 10 to 15% per year. So I suppose on that basis, you could look at maybe 1450, potentially even $1,500 an ounce within the next 12 months. Wouldn't be an unreasonable target. And equally, if that's true, then silver potentially could go up a bit more than that.
And what is it about this particular market environment that's supportive for those precious metal prices?
Yeah, it's always about the trajectory of real interest rates, so the relationship between inflation and rates. So I suppose what would drive that would be something reducing the likelihood of 3 interest rate hikes over the next 12 months. So that might be lower equities or geopolitical risk, anything that led the Fed to not be able to do the 3 hikes that are currently priced in.
And of course, those two things are pretty, well, they're not unnecessarily going to happen, are they? I mean, the fact that equities are at all-time highs and the fact that there is increasing macro risk, how do you balance the unknowns with making investment decisions?
Well, I suppose for a portfolio manager, you don't necessarily have to do that. I mean, my mandate is to be invested, so I'm going to be invested. I'm going to be in gold and silver equities and bullion anyway. I don't factor those things in. When I'm going to answer your questions, though, I'm thinking about what will drive a material change for the gold price, and those are the things that come into potentially changing people's views. But for me, I'm investing, I'm in, and positioned.
And talking about the portfolio, talking about how you are playing that sort of stronger fundamentals for gold, I think it's really interesting. We were talking before the cameras started rolling about where you're geographically invested, and you're quite selective about that, aren't you? Yeah,
I think it's important to narrow the universe. I don't want to have an investable universe of 400 stocks. It's way too much heavy lifting in terms of analysis to do that. So what we do is we say, look, where is the least geopolitically risky place to invest in gold and silver mining? And so for us, that's the Americas and Australia. It's particularly good for me to do that because about half the portfolio is invested in silver, and most silver production comes from the Americas anyway, so I don't really need to be in Africa. So we cut that completely out of the portfolio. We cut out Central Asia, Russia, and try and narrow in on places where gold and silver mining is done and has a good track record.
And that plays into something which we're hearing increasingly is important for individual investors, and that's ESG factors. You say that you can have a better idea about how these mines and how these companies are operated in those particular markets.
That's true. I mean, with mining, ESG and mining are naturally interwoven. So when I get asked questions about ESG and mining, I'm always, I think my responses are different to other sectors because inherently, it's integral to being able to successfully produce gold and silver. If you're not dealing with ESG, you're going to have problems. So it's absolutely, as I say, integral to the process anyway. But yeah, you want to take that very seriously. And as I say, reduce the potential for problems by narrowing down to places where the operating environment is cleaner and better run.
You therefore are invested in US equities. How much does the macro of the US play into the considerations that you have investing in US equities?
Well, look, when you say US equities, I mean, I do invest in stocks that are listed in the US, and I have some companies in the portfolio which have assets in the US too. But overall, if you're thinking about the US pertaining to our portfolio, actually the most important thing is just simply the relationship of the dollar to other commodity currencies like the Mexican peso, the Canadian dollar, Aussie dollar, because a lot of the stocks that we own have mines in those countries. So in fact, there's FX risk between the dollar and those places, and that's really probably more what I'm thinking about. Other considerations to do with the US probably don't come into it that much.
No, thank you very much.
My pleasure.
This is Emma Wall for Morningstar. Thank you for watching.